Okay, now I want to go into a sample of a typical owner finance transaction with very realistic numbers so that you can appreciate the power of this owner finance business model. Let's start with an example of a house that was listed for $100,000. Okay, let's say you found a motivated seller and they were willing to sell you that house for $75,000. If you've got pen and paper, kind of write these numbers down and follow along. Let's say you put $10,000 to improve the property, so now your total investment went from 75 to 85, okay? And then let's say because of your improvements, you were able to go ahead and sell the home for $120,000. Now, let's say on that $120,000 house, you were able to get someone to pay $15,000 down, okay? So now there's a loan, because it was $120,000, the loan is now for $105,000. And let's say you finance that loan for that person at 9.9% over 30 years. Now, your total invested amount is $70,000. And the way I came up with that $70,000 is, remember, you paid $75,000 for the house, you put $10,000 into it, so now you're into it for $85,000, and then you ended up getting $15,000 down from the buyer when you went to sell the house, right? So now you're into that house for $70,000. That's the total amount invested. Okay, now, if you finance that house, like we said, for that buyer at 9.9%, but that was a $105,000 loan, wasn't it? And your total investment was $70,000, okay? You follow me? So you just created a $105,000 note for a total investment of $70,000. When you do the math and actually figure what the actual yield is, that 9.9% turns into a 15.51%. Now that is an income stream that you can do all day long. These are very realistic numbers. And let's say you said, wow, my money's tied up. I don't want just 15%. Do you think you'd have a pretty good likelihood of finding someone that might be thrilled with 10 or 11%? Some retired guy that's currently getting 1 or 2% in the stock market? The answer is yes. So you could end up actually selling that stream of income to a private individual, a private investor, a retired person with money, and give them maybe a 10 or 11% return, and you end up making a nice profit while doing so. Or you keep it yourself and make 15.51. The calculation we just did is the key to starting down the road of building massive passive income. Once again, my definition of passive income is money that flows into my mailbox each month that I don't have to show up and go to work for. And that's what we're after, and that's what this course is about. The vast majority of people out there do nothing but trade time for money. And I don't care if you're a doctor, a lawyer, an architect, and your hourly rate is high. You have to show up and do something in order to get paid. And there's a huge difference between passive income and trading time for money. Don't fall into the trap of trading time for money. Hopefully by now you've started to see the value and the power of the owner finance business model. I want you to study that amortization schedule and imagine yourself on the receiving end of that instead of the opposite way, which most people are. We're going to talk about a lot of things in the upcoming modules that will give you the exact step-by-step process that we've refined and honed over the years to get from point A to point B. I know you've got a lot of questions starting out. This lesson was designed to give you the basic building blocks, and we're going to continue to progress all the way till you feel comfortable and confident that you can pull it off.